Great, thank you very much, everyone. Thanks for joining this session on the UK's global opportunity for digital assets. My name is Simon Toms. I'm a partner at Skadden, based in London, and head up our fintech team. So we're doing lots of work in this space, and I'm delighted to be joined by our panelists today. I'm going to let everyone introduce themselves briefly. So maybe Tom, do you want to start?
Yep, thanks, Simon. I'm Tom Rhodes, Chief Legal Officer of Agant. We're part of the exclusive club of GBP stablecoin issuers who are based in the UK. So my background, I'm a regulatory lawyer.
I'm Keith Grose. I'm the UK CEO at Coinbase. We're one of the largest cryptocurrency exchanges and a member of the S&P 500. Great to be here.
Hi everyone, I'm Varun Paul, Senior Director for Financial Markets at Fireblocks, which is a digital asset infrastructure provider, formerly at the Bank of England.
Hi folks, I'm Ken Cowan. I'm Head of UK Markets for XTC Network, which is a Layer 1 blockchain specializing in tokenization, payments and trade finance. Thanks.
Good afternoon, I'm Nigel, Global Head of Markets at Ripple. We're a full stack digital asset infrastructure provider, so all the way from a blockchain through prime, custody, payments, trading, liquidity, capital markets, and a bank.
Great, thank you all. So in the spirit of opportunity, we're going to try and be pretty ambitious and in our small amount of time cover stablecoins, the wider digital asset space, and then maybe some tokenization at the end. So a bit of a run through those three topics in pretty short order. But Tom, maybe we could start with stablecoins. What is the opportunity in the market for stablecoins? Lots of froth and noise about them in the digital asset space, but how do you frame the opportunity?
I'll have to rein myself in here because obviously stablecoins are like money, so basically anything that you use money for, so payments, buying in and out of asset management products, so funds, tokenized money market funds is a massive growth area that we're getting a lot of interest from. But then other investment services, so DeFi, which hopefully will come on to, which is a tricky area for regulation. And then what else? Banking, capital markets, FX. So one of the good things about being in that small exclusive club of GBP issuers is that anybody who's looking at doing basically anything on chain probably needs a stable coin, one way or another. And so we hear all kinds of different business models, cross-border payments. People come to us from all over the world saying, look, actually a GBP coin could be quite useful. The opportunity for stable coins is enormous, and it's kind of a key part of doing business on chain.
Nigel, maybe pick up on Ripple's role in the marketplace on the stablecoin side. What do you see businesses using you for? What are actually customers coming onto your platform and using stablecoins currently for?
Yeah, so we issued a stablecoin about 15 months ago in US dollars. Primarily, there's a range of applications. I think Tom just mentioned a few of them, but we go anywhere from payment efficiency. So particularly in dollars, the payment rails are very inefficient, both domestically and cross-border. So we attack that space. The FX challenge, we have a very efficient stablecoin to FX trading capability. So instant settlement on both sides, which really helps smooth markets. I think the big opportunity is in capital markets where there's huge amounts of capital efficiency. I worked in investment banks for most of my career, trading foreign exchange and other assets. Posting margin or settling a bond takes 2 days. You don't know when the money's coming in. If I buy and sell a bond, the dollars might come in before the other dollars go out, or vice versa. So you have no way of managing your intraday liquidity. What that does with a more efficient settlement system is it really reduces capital costs, regulatory costs, and settlement friction, which as a financial institution you can pass on to your end customer. So that's a really valuable means of cost reduction and efficiency.
Great, so I think that sort of frames lots of opportunity in the stablecoin space. I wonder, Varun, with your background on the regulatory side, how do you then see the Bank of England, for example, and then indeed the FCA, but particularly the bank on this topic, looking at the regulation of stablecoins? Are they also seeing the opportunity, or is that passing them by somewhat?
So, the UK is in this very critical moment where the regulations are in consultation. And there's two regimes, right? There's the FCA regime and the Bank of England regime. I think most in the industry would say that the Bank of England's regime is is proving to be the most contentious. There's a couple of things in there that have caught the industry's attention, and we've had some discussions and debates around holding limits and wallets on reserve backing requirements. But the FCA's regime seems very welcoming. And in a sense, the bank's regime is there for only systemically important stablecoins, and it is maybe a bit of a distraction here. So the UK does have the opportunity still. The rules are still not written in full. Has the opportunity to be the second mover, following MiCA in Europe, following Genius in the US, to set something that really could be advantageous, could give the UK an opportunity to make use of, take all these benefits for stablecoin usage. But we shall see where it ends up.
Yeah, I mean, how do you think, Tom, looking at your business as a GBP stablecoin issuer, how do you see that integrating into traditional finance? So the sort of on-off ramp piece, is that the main role you see of your coin, or do you see people just staying in your stablecoin and using it as a way of payment?
Yeah, it's a developing area. So like I said, we have a lot of interest, for example, from tokenized money market fund issuers who want to put their money market fund on chain and then offer it out to a wider market where all you've got to do is have a wallet and you can kind of buy in and out of this simple fund product. That's the kind of the vision, and you would use your stablecoin to go in and out of that, or the cross-border payments, remittances, that type of thing, and then DeFi. The challenge of integrating it into these financial services is the regulation, basically. So what I think has been one of the big challenges in the UK is that the regulatory regimes obviously are not finished, but in the meantime, a lot of institutions who might have wanted to do some of this stuff in the UK, where they have all the expertise, where they have a lot of asset management, capital markets business, have not necessarily felt able to, because not only is the regulatory regime kind of still being developed, but right now you have to go through a registration process with the FCA, where basically to integrate crypto asset versions or to offer crypto asset versions of what you're doing at the moment. So whether it's deposits, funds, capital market services, you have to register with the FCA under a money laundering regime. So these crypto asset services themselves are not necessarily regulated, and like Varun said, the consultations are out at the moment. But the registration process is that gateway to be able to do it, and the process itself has been many months. It's very thorough, which is credit to the regulators. But this is fundamentally an enormous barrier. It has I think it has a 15% success rate for applicants. It takes 8 to 12 plus months. And in a lot of cases, if you're an asset manager who's offering a tokenized version of your fund, you're already subject to money laundering rules and various rules and regulations, because that's part of offering the fund, whether it's tokenized or not. So it feels very duplicative. And this has put a lot of people off. And so they have looked at the Middle East or the US or some other jurisdictions, maybe MiCA, where everything is settled, and they've gone, it's pretty tricky to get going in the UK anyway. So integrating it into what should be a very sophisticated and innovative financial center in the city has been difficult, even in the absence of a full regulatory regime. So sorry, that's one of my chips on my shoulder.
I mean, does that chime, Nigel, with Ripple's experience? You're obviously a global business. What's the risk of the UK taking a different view from everybody else versus trying to align with, for example, MiCA or Genius in the US?
Yeah, I mean, it's very clear that, so Ripple has always said we want regulatory clarity, and that clarity has come in spades in the US administration and elsewhere in MiCA and as Tom said, the Middle East. There's ample opportunity for the UK to innovate. So we recently launched a partnership with Aviva to issue a tokenized money market fund onto our XRP ledger and settle it against our stablecoin. So, I think the history of the UK shows we have enormous amount of financial talent. It's a place of trust in financial markets with rule of law, deep talent pool, historically progressive regulation and legislation. We need to exercise that again And people, we have a choice. We're a global business. We have a choice to go elsewhere. But, we are building out our markets business out of the UK. I've run trading businesses out of the UK for 30 years, despite my youthful appearance. But yeah, it's a great opportunity. We shouldn't miss it.
So Ken, maybe building on that and looking at the broader current consultations and proposals for the crypto asset regime, what's your sense on the balance the regulators striking between the sort of consumer protection versus, which is a reasonable thing for a regulator to be worried about, versus the competitiveness of the UK and making sure that the UK is an attractive place for people to launch digital assets businesses?
Tom and I were just briefly discussing this before we came on. They've come at it with a very traditional playbook, which is understandable considering their history. There's always a feeling that I'm 20 years in traditional finance before joining the other world. There's always a feeling that the traditional finance world are still licking their wounds from 2008, despite it being quite a significant amount of time. So their SMCR regime, their transparency and accountability, standard regulation and reporting, is all fine and good. But when you're in such a mobile and evolving space that is lagging slightly behind their global peers, you do need to think slightly more further ahead. The bit that Tom and I discussed was about contribution to the fact-finding mission, which is delivering a regulation that's going to give clarity, that's going to let startups know that they're not going to have to backpedal at some point, and that they can be clear on what they're going to deliver at this stage has got the backing of the regulator to enable them to bounce on, and then hopefully regulation will evolve to support them as they go. On the consumer duty, I don't think we're there yet, to be honest. There's not enough clarity yet. It's a difficult asset class to actually confirm. There's a lack of accountability and transparency still within some of the market, which means, layering on the consumer duty. The other side, and we touched on the central banks as well, though, restricting the amount of stable coins that you're allowed to hold. That in itself is also against consumer duty. So, there's two sides to this coin as well. I think the final point, and we're here for fintechs and building unicorns, etc. If you're going to put an excessive capital burden on new starts coming into this market, and you're going to ask them to provide the same regulatory standard of reporting that their centuries-old peers are banging out just now, then you're always going to be putting a handbrake on the new market and how it's going to evolve going forward.
Makes sense. I mean, Keith, you're looking at Coinbase, a business in the UK that's very much at the forefront for consumer visibility out there. What are you seeing in terms of the way the UK is leading the way in these products? Are there any areas where we can say the UK is leading the way, or do you feel like the UK is following other markets at this point?
Well, I think time-wise we're following right now, but there's opportunity in that. I think where we can say we're leading is definitely around consumer protections, which I think comes out of some of the history that we've talked about, and also just the general approach here. But I think we do need to balance that with competitiveness. And I think that is really critical to get right in this moment in the next 6 months as we finalize the rules. Because obviously, capital and innovation are going to chase regulatory clarity and where opportunity is. And we have the opportunity here. We just need the regulatory clarity and rules that will actually let businesses grow and expand and invest. The good news is I think we're closer to getting it right than we are to getting it wrong. But there are some things in, I think, the consultations we've seen that are concerns. We've talked about the stablecoin holding limits. I think that would make the UK a global outlier if we did that. I think you need to make sure you can allow DeFi and centralized exchanges and centralized finance to interact and work. And the DeFi perimeter, as it's been defined, I think it would amount to a de facto ban and would, again, be an outlier for the UK. And then finally, we need to recognize that in the pursuit of protections, we've put in place FinProm, and that is something that, again, makes the UK an outlier. It's the hardest and most confusing place to onboard as a consumer into this space. All three of those are solvable, but I think it's really important to get them right if we want to seize the next version of capital markets here in the UK.
Is there sort of one area or a couple of areas you think that the UK could look at to make it more competitive to launch products to market while balancing the consumer protection? What would they be?
Yeah, I mean, I think I'll double down on the ones I just said, I think, which is we should not have holding limits on stablecoins. That is, I think, putting handbrakes on something before it's even gotten started. And there's lots of other tools you have to address risk in that market. Right now, 99% of all stablecoins are denominated in US dollars, but only 58% of global FX reserves in TradFi are US dollars. The question is,
Tom's issued the rest.
yeah, exactly. The question is, are we going to see that change? And I think putting holding limits on this would only slow us down. And I will go back to FinProm. We need to make this a place where it's accessible to users and where users can actually use these services. It's really painful to operate here right now as a consumer business. And I think regulators just need to reflect that that is part of the reality here, and I think it is solvable. And then the last thing is DeFi. I think we need to understand that so much of the benefit of this space comes from decentralized infrastructure and the efficiencies, the clear view of collateral, the risk management it offers. We need to make a way for that to interact with consumers through regulated gateways. And I think making that clear, again, is solvable, but we have to get that right before the rules are final for this space to take off here, in my mind.
I wonder, Ken, your thoughts on the risks of the UK of not taking advantage of this moment in time and opportunity. We're obviously not in the front of the pack anymore, but being a fast follower here could be beneficial. What do you think are the risks of not doing this?
I mean, we've already touched on it. 90% plus of stablecoins are backed by US dollars, so that's the US dollar denomination of the digital asset future. I mean, we're already quite a distance behind that, which puts us at a macroeconomic risk off the back of that. We've also touched on, the new banking platform and all these neobanks that have spoken before us. They're looking at new products, new delivery, new services that are all going to be based on new rails, blockchain, digital assets. And if we don't get on board with this, not only is the current revenue stream of the old standard bank going to dry up as people take their money out of banks and put them into stable coins, but the banks are also not going to be geared up in understanding how they can capitalize in the digital asset space. And actually, they could be making money from DeFi, they could be using it as lending, they could be creating liquidity pools, they could be doing all the things that the degens in the world currently are doing just now, but because they're not looking at it as an asset class or a product to bring in revenue, they're looking at it currently as a threat to their current business case, then actually, we're almost freezing ourselves in time because we're not thinking too much further forward. And then you add everything else on. Investment banking was my background as well. Capital liquidity, I mean, it's the easiest thing, having your money work for you every second of every day. You talk about settlement lags and waiting for your money to arrive before you can send something out. Trade finance, if you're waiting for cash to arrive before you can start your next leg of the business, and you could actually get a finance loan through digital assets. These sort of things are just going to amplify business and bounce things forward. You layer on AI on top of that, it's going to be yards ahead of digital assets. We need the two to move almost in tandem because you've got, programmable money working with an AI agent that's settling your cash flows on a second-by-second basis, making you as efficient as possible, meaning you can do more business with less.
You're finding lots of opportunity there. I can see that. We haven't got time to cover agentic AI on this panel as well. I have to save that for later. I wonder, Nigel, picking up on that theme of moving from sort of traditional finance into digital assets, which I think is your background looking at Ripple's business. If you look at, say, tokenization, which feels like it's the next big wave of topics we'll all be dealing with. London's got the capital markets infrastructure, legal framework, time zone advantage, all these pluses. How do you see, for example, Ripple positioning itself and the UK generally positioning itself to take advantage of the wave of tokenization that seems to be coming?
Yeah, I would say, so my team has sort of grown, 400% in the last 2 years, which gives you an idea of the level of investment that Ripple's making. Let's say we're mostly based in the UK and Singapore and a little bit in Dubai. We think the regulations need to keep up. So the closer we can get to regulating a tokenized security, like it's security, the better for us. And we've been having conversations with the SEC and other regulators around the world along those lines. But we are investing at this sort of intersection of traditional and digital assets, right? So, and I think you sort of distinguish between crypto assets. So buying and selling Bitcoin is different from using the blockchain infrastructure to make traditional markets more efficient. We bought a prime broker last year. We've just bought a treasury management company. Ripple is all in on that intersect and the convergence of these two worlds. And I think the UK has an opportunity to participate should it decide. I also think on the stablecoin point. the convergence between the central bank and the regulator is super important. And caps based on, a sort of, you're trying to manage central bank money versus deposits, right? So the European Central Bank tells you that they want stablecoins to be central bank money, essentially. That's not really what they were designed for. Like, do you want a flood of commercial deposits to go into the ECB out of the central banking, out of the depository banking system? There are also some macro risks. I was a macro trader for many years, and I think you need to, that alignment that we see in the US is a huge differentiating factor. Same in Hong Kong, but I think Europe's behind, and as was pointed out, euro stablecoins, dollar stablecoins make up 99% of the market. We're issuing in dollars. I don't see that changing in the near future until there's more alignment between the central banks and the regulators.
Yes, so lots going on there. I mean, Varun, do you think there's an area in the tokenization front where the UK is ahead, looking at perhaps some of the developments in the debt side of things?
Yeah, definitely. So let me just go back one step if I can. So Fireblocks supports a whole range of different use cases for digital assets. So just to make some of this tangible first, if I can, on the stablecoin use cases, we see the things we're missing at the moment, I'd say, just to bring it home, are things like businesses wanting to make those payments instantly. Just think of oil company bringing with a shipment arriving at dock that needs to make that payment instantly and doesn't want to lose 3 days of interest on a $100 million shipment, wanting that funding done instantly. A stablecoin delivers that. We don't have that opportunity in UK, in GBP. Think about a corporate treasurer, a CFO. Think of a German car maker trying to balance its books around the world and moving funds around the world and managing to do that much more frequently with a stablecoin than the current system. We don't have that ability in the UK. And thirdly, remittance companies. Companies like MoneyGram are stepping into the space to make those payments faster and cheaper, but also to improve that last mile delivery for the end user. Again, we don't have that yet in the UK. There is one place, as you say, where I think we are doing better, and that is the UK digital gilt offering. So the Digit gives us the opportunity within the digital security sandbox to have a tokenized government bond, which is something that actually isn't being done anywhere else in the world. And I'm fortunate enough to have a global role where we have discussed this with other governments around the world, and actually the UK is leading here. So you could imagine a world in which the UK could step forward here and say, we've got a digital gilt. It can serve as a backing asset for these stablecoins. It can serve to improve the liquidity and the operations behind a money market fund. And actually, that could be the bedrock for a really sound financial system built on digital assets. So there is hope still. There's a shining light there.
Good. Well, I think we've heard a lot about the opportunities for the UK. We are running short on time, so what I thought we'd do at the end is maybe ask each panelist, could you give us one thought as to what the UK could do to position itself, without being too rude about the regulators, to take the opportunity on digital assets and make sure we're not a flyover location, but are a leader in the space? Maybe Tommy start.
Yeah, I think in one line, the regulators could. They've done a lot of really good work preparing pretty comprehensive, prescriptive regulatory regimes. They could possibly finalize it with a more sort of principles-based, high-level approach and move some of the really detailed bits that possibly business models are not really ready for into guidance. Now, I know this is quite an ambitious request, but it's a lot of it's really good. But as you can see from even just a panel like this, there is a lot happening here. People are really figuring out different ways of doing things. Payments get made in a different way. You make them peer-to-peer instantly. Lending and capital allocation can be done DeFi by a smart contract, a piece of programming. Nobody knows exactly how these business models work and integrate into traditional financial services. And so for us, what would be really helpful would be to get the basics right, and the FCA and a lot of what's been done already is right, but maybe leave a little bit more room for people to figure out business models, but with a slightly lighter touch approach.
So passing it quickly down the panel before we get told off.
Yeah, I think I'll follow that. I would say keep your eye on the horizon in the sense that I think in the next 5 years, more and more capital markets are going to get tokenized. Stablecoins will become a major part of money movement worldwide. Let's not be so risk off in our rules now that we lose the long-term opportunity for the UK. So I think we, sort of similar make sure that there's enough room for the market to grow and for this to really become, I think, the opportunity that the UK really has here, which is to continue to be a leader in this space.
Varun?
I'd love to see us go beyond the 300 billion today in stablecoins. There's only a fraction of where money is going to end up. And so I think there's a real opportunity in global trade as other countries step back to make use of programmable stablecoins and support agentic finance and support trade finance with a really ambitious UK PLC vision.
I'll say something slightly different. I think the traditional finance space and the decentralized should get into bed together and actually get a better understanding of the real use cases. Because the bottom line, it's not really innovation that makes real change, it's money. And the money's sitting in the traditional space just now. As soon as you get all of that on board and understanding the benefit, then you'll see this accelerate.
I think a bit of risk appetite. You know, there's no doubt the US administration took risks when they were changing the regulatory framework. You know, we've had debates on the Clarity Bill. I was in DC when the Genius Bill was signed last year, but a little bit of risk, and it's okay. As long as you stay close with industry and fine-tune as you go, like stepping back and waiting forever is not what we want, basically. So.
That's great. So it's great to hear a collection of people who are so enthusiastic about the opportunity. Hopefully the UK can seize that, and looking forward to keeping monitoring these developments as the new rules come in this year. Thank you to my panelists and to everyone for joining us for this session. Thank you.